Traders, it's the 17th of January. I'm Joe Neighbour from Signal Centre. Just me today. Steve's away for a couple of weeks, so just have to put up with me in the meantime. Trying to stream to TradingView this morning seemed to be having a few issues. So if you're joining us from YouTube, welcome. Please feel free to get involved. Post up your comments. If there's any markets you're looking at that we can help you with, or I can help you with, please feel free to post them up. So I'm going to run into the latest headlines. First of all, let's take a look at what's been moving markets over the past 24 hours. Fairly narrow ranges yesterday due to it being a US holiday. It was the Martin Luther King holiday yesterday, so wasn't a whole load of activity. This morning we've had some Chinese data. The latest GDP report was unchanged in the fourth quarter with year-on-year growth of 2.9% from 3.9% previously, and that was above the consensus forecast of 1.6%. So coming in better than expectations. There's been little change in risk conditions as a result of this. The data has helped underpin confidence in the global outlook, although there was some skepticism that the data was accurate, and the equities overall were pretty mixed as a result. The dollar recovered slightly from 7-month lows yesterday. As we talked about in the charts, the dollar was into a key 50% Fibonacci retracement level, so we expected maybe to find some support, and indeed we did. But really, it seems as though the markets are in a bit of a holding pattern ahead of this key Japanese or BOJ decision that's due tomorrow. Tomorrow, they will announce their latest policy decision. On Wednesday, that will be at 7 a.m. UK time. There's been increased speculation that the central bank will make further adjustments to the yield curve control program and potentially let yields move higher. There'll be volatility following this decision, so we need to be aware of that tomorrow. We've got caution from the Canadian businesses in terms of the data we've seen there. The Business Outlook survey reported a slowdown in expected sales growth. Most companies expect a recession in the next year, while there was a slight easing of upward pressure on wages, and inflation pressures has eased as well. The Bank of England, Andrew Bailey, has warned over sticky inflation, stated that the market risk premium for September's trust budget has disappeared for the time being, but that the emergency bond buying program has been wound up with a net profit, which will benefit the Treasury. As far as the economy is concerned, Bailey expects that inflation will fall, but stated that the labour shortage is a major risk to the central case for inflation falling. And also the UK average earnings have accelerated as well. The data recorded an unchanged unemployment rate of 3.7% and a further increase in monthly employment. And the headline and underlying earnings increased 6.4% in the 3 months to November, above expectations of 6.2%. Tomorrow, we've got UK inflation data that will be coming out at 7 a.m. UK time at the same time. In fact, we actually have the Bank of Japan policy decision coming out at 3:30 a.m. UK time. So when we come to the desk tomorrow, we'll be aware of what that number, what that release is like, and we can expect volatility from the get-go tomorrow. Okay, so let's take a look at some charts, shall we? Morning, Mark. Thanks for your comment. Let's take a look at cryptos to start with. So what I've got here today actually is a slight difference from what we usually do. We typically look at Bitcoin to start with, but this is actually the global 10 crypto index. So it's an index made up of the 10 biggest cryptocurrencies. I just really wanted to highlight some key levels here that we need to be aware of. This is a daily chart. As we know, cryptos have had a pretty substantial rise in the last few sessions or so, really starting from end of December. And we can see that it's been a dramatic rise higher, almost 30% in gains we've seen there. But it is into some resistance. We do have a downtrend in place here, which is highlighted by this blue line. And we've got a couple of horizontal resistance levels to consider at 7228 and 7349. So unless we can get above those levels, then we are still in a downtrend with regards to cryptocurrencies. So we may want to temper the excitement a little bit at this stage, unless we can get a break above these levels, at which point then we can start looking at a whole range of cryptocurrencies in the safety that the rest of the market or the bigger cryptocurrencies are starting to turn a little higher. Let's take a look at Bitcoin as well. Here we've got some resistance drawn on at 21,555. Yesterday we saw prices did move higher, but closed off of the worst, off of the best levels of the session, and today they're fairly muted, down by 0.25%. So unless we can get above this level here, then there is a potential for maybe a bit of a pullback here in cryptocurrencies. But of course, we can't deny the fact that this move higher has been pretty substantial. We need to understand the real reasons behind that and whether or not this is well supported by the market. If it is, then potentially we can get a more substantial rally in the coming weeks and months. But as it stands at the minute, looking at the crypto index, it's approaching some pretty significant resistance, as too is Bitcoin on the daily chart. So let's take a look at some commodities now, shall we? Let's take a look at gold. Interesting move on gold yesterday. So continues to move higher, but it looks as though we may be in the process of forming some sort of short-term reversal. We can see here that yesterday prices moved higher on the session, but closed actually lower on the day, and we're backing that up with a further losses today, down by 0.15% as things stand. So we've shot above the 61.8% fib level, so we've got no real reference for Fibonacci levels at the present time. But it's maybe a bit of caution there, given that it's had a pretty substantial rise. And of course, a lot of this depends on what happens with the US dollar, and we've seen a bit of a bounce in that over the last 24 hours. So maybe that's tempering the appetite for gold as well. Let's take a quick look at silver. We can see here that prices haven't extended as dramatically as gold, and it looks as though prices are moving sideways at present, being capped by this 24.30 level. So potential here maybe for a bit of a pullback. We do have a significant resistance level above at 24.92 to target. That's a 78.6% fib level. And also I've got a horizontal line of resistance drawn on there as well. So maybe some more choppy sideways price action expected there on silver over the coming day. Let's take a look at the oil markets. They continue to trade within this bearish channel and up against resistance here at 86.05. This is on Brent. So while that remains the case, I'm expecting maybe sellers to step back in and drive prices lower in line with the dominant trend that we've got in place at the moment. Similar situation on crude. We've got resistance here at 81.14 and above that 83.66. If we can get above these levels and also break out of this downtrend channel, then maybe we could see higher prices towards resistance at 92.66, but still got a fair amount of work to do before that is the case. Let's take a look at natural gas now. So we know this has formed a large head and shoulders top pattern. Prices collapse lower through the neckline of that pattern, finding support around 350. Prices moving around here, trying to consolidate. The measured move of the head and shoulders top suggests lower prices towards 2.85. So still maybe expecting lower prices there. Yes, we may get some sort of correction in the short term, but we do have an unfilled gap here at 4.39, which may prevent prices from moving too far higher before the sellers step back in and maybe drive prices lower. But certainly the outlook appears bearish on this for the time being. Let's take a look at copper. That's moved down 2% today. As it stands, it looks like we're forming some sort of engulfing candle on the daily chart. It's very early in the session still, so things could change dramatically there. But it has had a decent move to the upside, so we wouldn't be surprised to see some sort of pullback into these support zones down to around 3.968. If we get some sort of consolidation and some evidence of fresh buying support in and around this level, then that would indicate that prices are still set to move higher on this one. But at the moment, we are lower on the day, potentially forming an engulfing candle, which could trigger some short-term profit taking or consolidation in price. Let's move on to currencies now and take a look at the all-important dollar index. Let's bring that up. So, interestingly, yesterday we saw prices hold this 50% Fibonacci retracement level that we have here on the yellow line. And if we look at the price action yesterday, we did make new lows on the session, but closed strongly higher, holding that 50% fib level. So we still haven't seen a close below that level. So that suggests that this area is being or is providing a decent amount of support. We are off of the best levels of the session and reversing a little bit today, down by 0.3%. But maybe we are in the process of finding some support here, and in the short term we may see a rise towards resistance at around 103.40. If, however, we get a close below this 50% fib level on a daily basis, then maybe that will suggest that lower prices are likely. As we can see here, we've got a head and shoulders top pattern on the daily chart. The measured move of this pattern suggests that prices could eventually go down towards 95.90. So the overall outlook remains bearish, but being at this 50% fib level, there is potential for a short-term correction there. So we'll keep our eyes peeled for that. Let's take a look at Euro US dollar. Prices extending higher from this what looks to be a bullish flag pattern. Yesterday we can see that prices were fairly muted. We did actually make a new high on the session and close below the low of the previous session, so that is an indication of a short-term reversal. As things stand today, up by 0.1%, so potential maybe for a bit of volatility on this today, pulling back probably to around this level 107.52, which we've got actually a limit order to buy on this on our intraday trade ideas. So we are looking to buy dips still on euro US dollar, given that the dominant trend in the short term is still moving higher. The 50% fib level is something to keep an eye out on. That is at 109.42. So into that kind of zone there, maybe we'll get some sort of reaction and potentially a pullback in the short term. Let's take a look at cable. Yesterday we saw prices move higher but then reject at this 50% fib level, and also a resistance level that we've got from dating back here from August last year. So we've broken out of this wedge pattern, suggests a continuation higher, but prices coming up a little bit short yesterday. Trying to move higher today, up by 0.25% already. We've got the UK inflation number due out tomorrow morning, so expecting some volatility on this in the early stages of tomorrow morning. But at the moment, I mean, the trend in the short term is still higher. We've got this wedge pattern, which suggests a continuation higher. Major resistance really to watch for is around 124.35. So if we can break above that, then that may send prices towards this 61.8% fib level at 127.57. Let's take a look at dollar yen, see what's happening here ahead of the all-important BOJ policy decision. So price has been trading within a bearish channel, as we know, and it's been pretty consistent really at providing resistance for this market. We can see that any rallies towards the upper end of the channel have presented selling opportunities. We've also broken down through these key support levels at 130.39, and while prices remain below that, we now expect that level to act as resistance, and today that's pretty much marrying up with the downtrend channel. So any rallies into that level may present selling opportunities, but of course tomorrow 3:30 a.m. UK time we've got this BOJ policy decision, so we are expecting some dramatic volatility on this over the next 24 hours. So if you are taking fresh positions, I would urge caution, given that we are expecting some significant volatility. Unless there's any other requests on FX, I'll move on. If there are, I can come back to them, it's not a problem. But I'll take a look at indices, and we can have a look at how they're shaping up. Let's start off with the Euro Stoxx 50. So this looks as though it's formed some sort of bottom pattern. We've broken out through resistance at 3998. Yesterday we saw a little bit of stalling on the price. It obviously yesterday was a quiet day, given that we had this US holiday, so I wouldn't read overly into that as things stand, but potentially we could see a pullback to test this newly formed support around 4,000, and it would be good to see some buying re-emerge at that kind of level to suggest that this is a strong support level and could potentially provide a base for higher prices. Let's take a look at DAX. We can see here that this is driven through resistance at 14,812. Posted a doji candle yesterday just shy of a 78.6% fib level. Again, maybe we could see a pullback to around 14,800 to confirm that new support level, which was previously resistance. If we get some fresh buying impetus around these levels here, I would say this is probably more of a range than a specific level. We can go by these highs here to that level there. So in that range there, if we get some fresh buying emerge, then that indicates that we've got strong support in place and we potentially have a big bottom, and we can therefore start targeting higher prices. Let's look at the FTSE just to round up the European markets. That continues to move higher. Yesterday, very much a kind of non-event, to be totally honest. The prices were very flat indeed, posting a doji candle. And we're doing the same thing again today, down by 0.04%. I think really these markets are in a bit of a holding pattern ahead of these major events that are occurring over the next 24 hours, most notably the BOJ, but also the latest inflation read in the UK. The red line that we've got above the price at 7,903 is the previous all-time high on the FTSE. So where after the wake of the pandemic, a lot of markets actually went on to go and reach new all-time highs, particularly in the US, and we saw a bit of a bubble creation. We never really got there on the FTSE 100. It was one of those markets that severely lags behind. But now it's still in the show. It's pretty much the strongest market out there at the moment. Do I want to be chasing it at the moment? Probably not. because it has been quite a dramatic rise, and we are very close to these previous all-time highs. So I'd be interested to see what sort of reaction, if we do eventually get there at that 7903 that we get. Ideally, what I'd look to do is maybe buy and pull back towards this newly formed support at around 7670. If we can start to consolidate around that level, form a bit of a bottom, and see some new buying materialize, then that would provide me with a lot more confidence that prices are going to continue moving higher in a more sustained way. So I'm not sure I want to chase it just at the moment. The US markets are obviously a key driver in all of this when it comes to equities as well. The S&P 500, the broadest of the US indices, is still trading in a downtrend. So although we're starting to see some positivity in some of the European markets, it's not being seen in the US markets at the moment. And that for me is a massive red flag. We need the US markets to be moving higher to give us the confidence on a global scale that that equities in general are in for a good ride. And at the moment, we're not getting the confirmation from the US. We're still trading below this downtrend. And until we can break above this blue line and hold above it, I think we may be in a position where we might see some risk aversion, or US participants taking profits here if they've got any from this short-term rise, because at the moment we don't really have a conclusive base pattern in place that suggests that prices are going to move higher in a sustained way. So we need to be aware of this. The Nasdaq, obviously, we know this was the big leader in the wake of the pandemic. Prices went shooting higher. We saw some astronomical moves in a number of tech stocks, but the crash in this has been pretty severe and not really showing any major signs of reversing just yet. We've still got a downtrend in place, as we can see here, evidenced by this black line. We've got resistance at 12,090. I think if we can break above that level, then maybe what we will confirm is a short-term double bottom pattern, and that would give us a little bit more confidence that prices could potentially move higher. So this is what I'm thinking here. We've got potentially a double bottom. We need to break above the neckline here to confirm that, at which point then we can start looking for higher prices. And the measured move of this double bottom would suggest maybe that prices could head higher over the medium term towards 13,750, which would be pretty much bang in line with this previous swing high that we saw back in August. So still lots of work to do on the US markets. I don't think we can get too carried away yet by taking on too much risk. I know the European markets are looking pretty healthy and pretty strong, but as I say, we're not really seeing the same kind of follow through in the US markets. And for me, that is a little bit of a concern. Okay, so let's move on to the gun to the head trades then. So this is where Steve and I, when he's here, we go through trade ideas and we pick them live on the stream, in the hope that we can turn a profit between now and 9 p.m. UK time when we close these ideas out. So we only give them, a day effectively to work out. The ideas that we come up with, we have to come up with them, pretty quickly, as if we had a gun to our head. What would we trade right now? Each of the ideas that we publish have stops and targets and risk reward ratios that are better than 2 to 1. We're now posting these trade ideas on a live environment. We've put £2,000 into a trading account starting from January, so not huge sums, but just trying to, make it more realistic for probably the newer traders out there that may be starting with smaller balances, and just trying to show that, it is possible, hopefully, to turn a profit in these markets by taking the approach that we do. So I'm just going to activate the account and then start trawling through some charts, see if I can find something that stands out to me today that we can trade. So yesterday's trade idea, I was looking at New Zealand dollar versus the US dollar, hoping for a bit of a reversal on that. It was probably wishful thinking, given that we had that US holiday yesterday. So fairly muted moves in the US dollar, although you did see a decent bounce from that major support. This was the trade idea, which was published to our profile, signal_center, if anybody wants to check it out. So highlighted a bit of a range here in the short term, and was looking for a move lower. And if we click the play button, we can see that it just really didn't go anywhere. And to be honest, at the close at 9 o'clock, I was actually offside by 0.17R, equivalent to about £3 on the trading account. So no good yesterday, but certainly not a disaster. You can see here, this is our balance. So since we started with 2,000, we are slightly lower, and obviously hoping to put that right pretty quickly. So let's take a quick look through some markets and see if we can find something that stands out. So typically when I'm looking for these ideas, I am looking for some sort of reference on the daily chart and then marrying that up with the intraday charts. So this is my daily chart up here. This is an hourly chart here. And I'll just have a quick flick through some currencies to start with to see if there's anything standing out. Okay, so something like this, Aussie CAD, we can see that's into a resistance here on my daily chart, but not really getting any warm fuzzy feelings from the intraday. Something like this might be a decent candidate. This is Aussie Swiss. So let's take a look at this in the daily chart. Obviously, I've got a gun to my head, so I don't want to spend too much time on this. So looking at this on the daily chart, we can see that prices have been pretty range bound. We did see an overshoot to the downside here back in late December. We've seen a rally higher into some resistance levels here. We've also got 50% fib. If we take a look at price action on Friday, we posted a doji candle, having made a new high on the session. And yesterday we can see there was a bit of reversal that took shape, and we are attempting to move lower again today. So a lot of white space for us to move into on the downside here. Just looking at this on a daily chart, this would be the kind of profile that I'm looking at. Stop above the high that we posted on Friday, looking to target maybe a move down to the lower end of the range. So on a daily basis, looking at something like that, which would be around 2.88 as a risk reward ratio. Let's take a look on the intraday charts to try and finesse the entry a little bit. Arguably, maybe some sort of short-term top here, maybe a little head and shoulders trying to take shape. I can obviously be a little bit more aggressive with these trade ideas on the daily, the intraday setups. But at the same time, I want to make it realistic and give myself a chance of actually getting in and out today. So I'm going to sell this. Let's just draw this up first of all. It's at current price of 64.30. Going to go with a stop loss of around 37 ticks. That's at 64.66. And therefore, I've got to target a reasonable pullback in order to make the risk reward worthwhile. So we've got some levels in here that we can target. We've got a couple of spikes into a resistance there. Then we saw a punch through it and then a pullback roughly towards that level, which seemed to hold. So that'll be a decent area to target on an intraday basis. So around 2.13 as a risk reward ratio on that. Let's get the trade up here and see if I can get this on. Will it allow me to bring up a ticket? No. Okay, I had to be on the right market. So let's have a go here. I've got to redraw that. And we're going to get in at market. We said the stop was going to be around there, 64.67. So let's get the stop loss in at 64.67. My target was going to be, can I move this? Yeah, was going to be into this level here, 63.48 as a take profit. And I'm going to risk 1% of our trading account to place that trade today. So that's a 2.26 risk reward ratio. Let's click the button, get it on. That will close out at 9 p.m. UK time. Or if the stop of the target is hit in the meantime, it will be closed out before. So that trade's on. I'll get it published up as well with a bit of reasoning behind it, and that'll be there for all to see on our TradingView profile momentarily. Okay, let's take a look at the data today and over the next 24 hours that's due. So 10 o'clock, we've got the German ZEW index. I would say that's probably of medium importance at the moment, given that the markets really have got all eyes on that Bank of Japan policy decision. We've got the Canadian consumer prices at 1:30 today, so that's the latest read on Canadian inflation. At the same time, we've got the US Empire Manufacturing Survey, and then we focus on the overnight price action. So at 3:30 a.m. UK time, we've got the Bank of Japan policy decision. This is where they're widely speculated that the central bank will make further adjustments to the yield curve control program and potentially let yields move higher. So there will be high volatility following the policy decision. So if you are going to carry any positions overnight, particularly if they're linked to the Japanese yen, do be careful because there is expected to be some pretty big moves. At 7 a.m. UK time, so prior to us coming online tomorrow, there will also be a data release from the UK consumer prices, the latest read on inflation in the UK, which again could help shape monetary policy in the UK and give us some ideas about what's going to happen with regards to interest rates and how the Bank of England are going to tackle that going forward. And then tomorrow, later on in the session, we've got the US retail sales number. Okay, that's pretty much it from me today. Apologies that we couldn't get this streamed on TradingView. I'll have a look at this and see what was going on. Hopefully get that sorted tomorrow. In the meantime, guys, have a fantastic day, and I'll be back in the morning. Take care. Goodbye.